Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has continued to balance near the all-time high and is set to open at the initial resistance zone of 2504 to 2506. In order to get any kind of sustained breakout beyond 2506, we will need to see broad market strength, sustained upside momentum, and participation from the other markets. If those conditions are present, then we could get a breakout attempt beyond 2506. On the downside, we have this week's low at 97.75 and the initial support zone at 93.5 to 96, which is still an area where responsive buyers could be active. Now, the main catalyst today is the FOMC announcement due at 1 p.m. Central Time, and usually ahead of the Fed announcement, the market remains fairly two-sided. Now, it doesn't mean that there can't be a breakout attempt, but a sustained breakout ahead of the Fed announcement is lower probability. So even if we get a breakout attempt, the market may not really go too much higher, and it could be very two-sided ahead of the Fed announcement. Similarly, if we see a failure at 2504 to 2506, on the downside, it's very unlikely that the market would take out the initial support zone ahead of the Fed announcement. Following the FOMC announcement, we could get some short-term directional movement. We also have to keep in mind that yesterday was a NR78 day, so it marked the narrowest range in 78 trading sessions. And usually, volatility and range contraction leads to volatility expansion. Now, that volatility expansion doesn't have to happen immediately the following day. For example, if you look at the last FOMC day, you'll see that even following the Fed announcement, the market didn't really expand the range much. But then on Thursday, we got a pretty decent range. So this idea of volatility contraction leading to volatility expansion doesn't have to play out immediately following the NR78 day. It could take place today, or it could even happen tomorrow. But we should be on the lookout for an expansion in volatility and range. So heading into the open today, our short-term bias continues to be neutral bullish, but with that understanding that we are trading near the all-time highs here, and in order for the market to put in any kind of sustainable breakout, we will need to see upside momentum with the NYSE tick holding above zero and printing at least +5 to 600. And we also want to see participation from the other markets with NQ holding above 59.92 and TF holding above the 1440 area. If those conditions are present, then we could get a successful breakout given that the buyers are in control. But if the market attempts a breakout and we're not really seeing any momentum and the other markets are actually heading lower, then the breakout would be more likely to fail. So we have to be fairly nimble and flexible with our intraday bias. And in the event that a breakout attempt takes place, we have to assess the quality of that breakout attempt to determine whether it's likely to be sustainable and continue, or if we're seeing some warning signs like the other markets not participating or a lack of upside momentum, which would make it a riskier breakout attempt. After the Fed announcement, in the event that we start heading lower, like I said, buyers can still defend at initial support, and if we fail to hold initial support, responsive buyers can still be active at 87 to 89. So those are the main ideas heading into the open. Let's see how the market responds to 2504 to 2506. Let's keep in mind that the market can be choppy ahead of the Fed announcement, which is due at 1 p.m. Central Time, and we'll take it from there.